So looking at this particular PDF right here, this is all you need to be able to identify ICT Daily Bias profitably. So in summary, this is entirely all we need. We need drawn liquidity, which is where we're going to be targeting, the context where we're going to be trading from, and the narrative, which is going to be the price delivery, the market structure, the entire storyline moving from context all the way to draw on liquidity. So with that said and done, let's see examples on the chart. So right here on the daily time frame on the Euro USD, you can see this particular equal lows right here, which is going to be our draw on liquidity. So the next we're going to be identifying is our context area. In other words, where's price going to be trading from? And currently we have seen our price trace all the way into this particular price range, which is from this high to this particular low right here. And we can see our price has reached for this particular candle's open price right here. And you can see the rejection after price trade above it. So right here is our context area. So we're going to draw down to lower time frame and see the narrative of price leading from this particular context area to this particular narrative. So right here on the 1 hour, what we're looking for narrative is to see either a market structure shift or a change in state of delivery that's going to be leading us from this particular context area all the way down to this particular drawn liquidity. And as we can see right here, we already have a break of structure below this particular low right here. So this is an indication that going forward in price, we want to see price move all the way to this particular drawn liquidity. So let's see what price does. Right here, we can see we have more break of structure, confirming that price indeed want to push down to this particular drawn liquidity. And right now, we can see our price has retraced into this particular fair value gap right here. So we can confidently frame our risk to reward with our stops just above these highs right here and our targets on this particular drawn liquidity, which is the equal lows we identified from the daily time frame. So let's see what price does. And there you have it. So you can see our price trade all the way from this particular fair value gap into this particular draw on liquidity right here. So right here is another piece of price action on the daily time frame on Euro USD. And right here we can see this particular gap in price right here. And currently we can see our price has traded to this particular swing low right here, giving us a good reaction right here. So dropping down to the lower time frame, we want to see our price will give us a narrative from this particular context area all the way to this particular draw on liquidity, which is that gap in price from the daily time frame. Same, we already have this particular break of structure right here. So let's see what price does. So this particular bullish candle right here is a very good indication that price will want to push all the way from this particular area into this particular draw on liquidity. So we can confidently frame our setups, putting our stops below this low and just aiming above this high into this particular gap, which is an imbalance on the daily time frame. So let's see what price does. And there you have it. And we can see our price traded all the way from this particular context into this particular draw on liquidity, even trading past it. Now going back to the daily time frame, we can see that after price pushed higher, this is the piece of price action we have. Now price has given us a swing low right here, which can act as our drawn liquidity. And price has traded into this particular imbalance right here. And we also have this particular mitigation block that price could reach into and sell aggressively, attacking this particular drawn liquidity. So let's draw down to the lower time frame and see a narrative in price to lead us to this particular drawn liquidity. So right here on the 1 hour, this right here is the imbalance that price traded to on the daily time frame. Right here is our swing low, which is our possible or potential drawn liquidity. So we want to see if we can see a narrative in price that's going to lead us all the way to this particular drawn liquidity. So that can be a market structure shift or a change in state of delivery. So what we don't want to see is price straight past this particular area, which is this mitigation block or this imbalance, because that will invalidate this entire context area. So let's see what price does. So this is good. We can see how the momentum of price pushed to the sell side, giving us a good break of structure right there. And even on this particular candle, we can see our price has retested on that particular breaker block right there, which is this particular swing low right here. Let's say if price will trade into this particular fair value gap right here to give us a very good entry to target this particular drawn liquidity. So let's see what price does. So right now we can see our price did not trade into this particular fair value gap right here, but price took out this particular swing high right here, which is a session based liquidity, and we can see the sell momentum pushing to the sell side. So this can be an indication to actually go short. So we have our entry right here. We put our stops above this particular fair value gap because there are chances that price could actually reverse to fill in this particular fair value gap. So this is a very good protective stop, and we are aiming for this particular draw on liquidity. So it's not the best of risk to reward, but it's actually a good and high probability trading setup. So let's see what price does. So you can see price push down aggressively, but before price push down, you can see this weak rejection all the way to the buy side before pushing down. If we had put a very tight stop loss, probably would have been wicked out by spreads, but because of we put a very good protective stop right there above this particular fair value gap, you can see that was not the case for us. So that's why I encourage, while trading, you need to put your stops at a place where you know that if price actually gets to that point, it invalidates the trade entirely. So that's why we actually have our stops above this particular fair value gap. So let's continue and see what price does. And there we have it. So you can see our price trade all the way from this particular area, attacking this particular draw on liquidity right there. So I hope you find value in today's video. If you do, hit the like button, hit the subscribe button, and if you have your questions or your thoughts, you can leave them in the comment section. And also make sure to share this video to anybody you know that is struggling in identifying daily bias. And until next time, see you in more videos.